Hello traders, this is FreeFX. I am Francesco, and today I'm going to talk to you about the following. First of all, a quick disclaimer just for Okay, so topic of the day, risk on, Euro USD coiling up. And I'd like to really start with the calendar for this week. I just put the high impact filter on the My FX book, economic calendar for FX, for the Euro and USD only, and you'll see that yes, we have some things which may or may not actually influence the outcome of currency movements. We have Wednesday home sales in the US, Thursday initial jobless claims, and then on Friday we've got PMI, and we've got in for French and German PMI, and then we've got new home sales in the US. So not huge market moving events, depending on how they are interpreted. So I'm going to close that and move on. So just back to the topic, we're talking about risk on, and the question was, is the euro coiling up like a snake? And really the point of that is that we don't really have a clear picture of where we're going at the moment. The European Council has been meeting furiously for an extended fourth day, trying to resolve the situation in terms of the balance between essentially loans and grants. In other words, how much money is given freely, and how much of it is a loan that has to be repaid under certain conditions to the various member states. So, in other words, we really have no clear picture in terms of how this is going to pan out. Now, the latest news from about an hour ago is that the European Council President, this is from Euronews.com, is that the European Council President, Charles Michel, said that he's confident a deal on the bloc's coronavirus recovery package can be reached after putting forward a new proposal, which will offer concessions to the so-called frugal group, Austria, Denmark, Germany, the Netherlands, and Sweden. With the amount to be handed out in grants down to 360 billion from an initial 500 billion. So the initial recovery fund at 750 billion has been reduced to 672.5 billion euros. So this might be a sign of progress that would bolster the euro, certainly. Now this is the euro futures September expiry, and we have the data here for the hourly. So we see how we've kind of moved on from through last week into this start of the week. We had progress from the 1.14, and we've kind of been stuck under 1.1450. Trying to go beyond that. We had a little bit of a surge at the start of the week today, but we've not really managed to capitalize on that. So we'll just have to wait and see. In terms of the open interest, we've talked about this before. The 1.14 remains buy calls, remains very strong area. As you can see, 4.8. It was almost 6. It's kind of come down a bit. And maybe because we've achieved that price, and so now the next kind of big ticket is the 1.17. We also have something there at 1.15. That's the next biggest on a different timeline, but it's certainly going to be a major achievement to get to 115. Now, moving on to tradingeconomics.com. On this chart, I've overlaid two things: Euro USD and gold. Now you can see kind of for the last 10 years, we've had quite a bit of a battle going on here. So Euro USD has sort of been Euro USD is sort of, actually squeeze that in a bit. Euro USD has been moving quite a lot, and we see from about 2 years ago, this high here at 124, and Euro has been kind of dropping considerably to the low of 107 something, and all the while the gold has been a sort of quite stuck in a sort of narrow range, and just recently with a sort of drop in Euro, and it's coincided with gold picking up considerably from this about 112, and now we're at 120, about 181. So that's a huge rise in gold, and certainly we can say that this move is not a coincidence. Now there's something to think about. So the title of today's topic video was risk on ? And let's look at that for a second. So two things going on here. We look at the gold futures for a second. This is a CME group, and this is actually July data because it's on a 3-month expiry. We want to see the current month to get a full picture here. See gold rising there from 1.6 something to 1.8, or rather 1600 to 1800. And you can see that the volume is actually been descending quite a bit. So there's a lot of sell which didn't really achieve much, and then the buying kind of waned. Another second wave of buying which picked up gold, and then the buying volume has dropped quite considerably. If we look at the August figures, because that's obviously coming up, and we turn that into candle and just check that we've got the same. Yeah, it's daily. You can see the same picture really, just waning buying volume there. So we're not using an RSI, but we're using volume figures, and what this tells us is obviously gold is more complex than just futures. But speculatively, what this is telling us is that this big rise is weak, is vulnerable. And I'm going to go on to the commitment of traders COT chart from barchart.com, and I looked at the COT charts, and they've got essentially something similar going on, because you can see the rise in gold. Clearly it picked up from, as I said, sort of March of 2019. It's picked up quite a bit. But what you can see as well is, if you look at large speculators, which is the category that we looked at when we considered the Euro commitment of traders charts, it's actually kind of steadily declining, or not really picking up in a trend, in a heartbeat. And if you look at the managed money as well, it's actually been declining in a similar fashion, if not more. So it's not supported in a speculative way. There's a huge rise, and so gold is meant to be the safe haven when in times of trouble. And what the trouble is, perhaps, is what we talked about in terms of the S&P 500 declining. So if you look at March 2019 or June, when gold started picking up, I could go back a little bit further just to make it 2019 March. It's a 4-hourly. That's probably why. I'll go to the daily chart and go back to 2019. Here we go. So gold was rising from about here, and now that's the S&P 500 in blue, and this huge drop from February. So actually, what I'm really interested in here is that so gold has been rising recently, but so have the Euro USD and the S&P 500. So normally when there's a risk-off environment, we have a, let me just hide your USD there for a second. When we've got a risk on environment, that's usually when gold is not as desirable, and a risk-off is where gold should, in theory, shine. So if I just have the gold US dollar there. All right, so that's basically the two charts. So the red is sort of orange is now gold, and you can see S&P 500 and gold there actually rising from kind of March 2020 together. Just quite something. If you just put your mind to it for a second, gold and the S&P 500 are rising together. I'm just going to put this to a year. Okay, that's somehow just flipped to something completely different. So I'm just trying to get this to, there we go. Squeeze a bit more info there for you. So you can see, so not in a sort of mechanically exact way, but usually when there was a sell-off in the S&P, the gold was picking up. And then, you know, another sell-off, gold picking up. But actually, from this time, really, from the COVID crisis, gold has kind of mirrored the S&P 500. And after that ranging that I talked about, from about middle of 2018, really, the middle of 2019, we started seeing this rise. And although it's not copycat with the S&P 500, it certainly has been steadily increasing, and then has sort of mirrored the S&P 500, especially in the last few weeks. This sort of from April on, it's really quite remarkable. So what that means is gold is weak going up, and the S&P 500 is not, because it has a long uptrend behind it. So if, say, as a matter of speculation, the S&P 500 continued higher and gold didn't, what would happen to the euro? Well, we can resume looking at the euro. Now this is kind of where it gets a bit messy, so I'm just going to have to take something out here. I'm going to take out the S&P 500 for a second. So this is gold versus euro again, as we looked at before. So here's the euro kind of picking up again, and gold picking up again. Now, obviously, historically, the euro has been higher. If you look back to 6-7 years ago, let's say, euro has been much higher, and gold has been much higher. Now, gold has actually got back to the levels of nearly 8 years ago, and the euro is not anywhere near that. So, in other words, just to kind of summarize, we have recently, as I kind of mentioned, been seeing an alignment of the Euro USD with the S&P 500. So where generally they haven't moved together. They have been sort of moving in sync more recently, and the euro has been seen as a sort of in sync with a risk-on environment where there's appetite for buying in a kind of stock market sense. And that's fine. So by that token, should the S&P 500 continue to improve on sort of higher highs, then so should the euro. And if indeed there is an agreement between all member states on the recovery package, with the ECB already behind it, then there is all manner of kind of thinking that this is a good thing for the euro. And we haven't even looked at the Dixie, the dollar index there, but let's leave it just for now. Gold, on the other hand, has been strangely aligned with the S&P 500 as a risk-on, as opposed to being a risk-off kind of safe haven metal, as it's meant to be traditionally. So, and this makes the picture quite muddled. So if the gold rush, so to speak, in terms of its price is overextended, but the euros isn't, there's nothing saying that this correlation could easily break and gold just rebalance itself, and euro and S&P continuing higher. It could well be that some of the gold buying might go migrating to euro, but that's just me really saying that. But certainly it's an interesting time in terms of trends when you think of risk on and risk off, and what the market thinking is here is certainly not very clear. If you think of this, which per se is different for what's been before in terms of positioning on gold. Not strong positioning, but price rising. Of course, you could go, if you had time, and literally look up gold mining companies and their share and their productivity, supply versus demand, how much gold is being mined, how much gold is on the market, etc., etc. So what is driving price up? Because it is the speculative side, but there's also the supply side, like with oil. So how much gold is actually being produced? I haven't actually looked at the figures for that. I apologize if that's what you thought I was going to go on to next. So at the moment, we are just lingering between 114 and 115. As you can see, this is the close line, by the way, so it's not candles. If you want to sort of the candles view, then that's easily done, but just leave that for now. So we are basically where we were on the 6th of March, and we're sort of back to these kind of levels. And it looks, by all accounts, like we might surpass that, in which case the road is kind of painted, possibly, to get up to these levels here in about July 2018, so sort of 117, but there's no certainty of that. So my listeners, if you're watching this, just bear in mind that trading is a risky business, and we can only be as good as our last trade. So all of this amounts to nothing if I'm going to lose my precious money on the next trade, hoping for a rise. But I am really looking at the euro as something that can appreciate, given that there may be a resolution to the last European Council. So I wish you goodbye, and thank you for watching my latest video.